All right, we're going to move to another big mover. New York Community Bank sinking once again today. Our Leslie Picker back at CNBC headquarters with more on this story. Leslie, what's the latest?
Yeah, Frank, look at that, wiping out another 23% today. This is kind of the epitome of growing pains. New York Community Bancorp made two sizable acquisitions in the last year or so. You've got Flagstar in December of 2022. That deal catapulted NYCB into the top 25 in the country by assets. And then almost a year ago, NYCB scooped up many of the assets and assumed the liabilities from Signature after it failed. So in doing those two deals, NYCB surpassed the critical regulatory threshold of $100 billion in assets, subjecting NYCB to more rigorous stress testing and oversight. Now, those plans are typically submitted in April, meaning banks need to set aside the appropriate amount of reserves ahead of time in preparation for stress tests. The Fed just released its scenarios for 2024 testing, noting a severely adverse scenario that features a much higher starting level of interest rates compared to previous years. Not too surprising, given the trajectory of interest rates, and that those interest rates decline more precipitously in the test. The way one analyst explained it to me this morning is NYCB opted in 4Q to bolster its reserves and criticize much of its multifamily loans and office loans, essentially address the potential risk in the portfolio now versus a more phased-in approach. By ripping that Band-Aid off, NYCB revealed higher than expected losses and, as a result, had to slash its dividend. Now, there are still very significant unknowns here. Why did the chief risk officer and chief audit executive depart months ago as NYCB was transforming into a bigger bank? Note they announced those roles were filled today. But also, why did NYCB discover a weakness in internal controls for loan review? And are there any other issues that may pop up as that review continues? All of this uncertainty definitely playing a role in weighing on that stock price today, Frank.
Yeah, a lot of developments there, Leslie. We know you're on top of it. Our Leslie Picker, live back in Inglewood Cliffs. Again, New York Community Bank shares down more than 22%, almost 23% right now. Weiss, I'm going to come over to you. You have a lot of financials ownership, Goldman Sachs, Bank of America. What do you make of NYCB? What do you make of the regional bank space?
It's troubling. So I know Jim takes a different view, but I think the wall.
No, I don't.
The massive wall. Good. I'm glad to see you. You don't. The massive wall refinance.
I'm getting nervous that you guys are agreeing.
Me too. I'm getting particularly nervous. Tell me what he's agreeing with. But the massive wall refinancing later this year and into next year, we're going to see more of these problems. This was the other shoe to drop, and clearly not the most well managed. And given the fact they went through an acquisition fairly recently, and the Fed didn't pick up on the poor controls, I mean, that's troubling as well. So we don't know what else is out there. As I said, JP Morgan hit an all-time high. So why mess around with the regional banks and try to buy value, which doesn't exist?
All right, speaking of the regional banks, let's just show really quick a chart of the KRE, the regional bank ETF, over the last year. If you look here, it's actually down double digits over the last year. Following SVB, so a lot of turmoil here. Bryn, what's your take either on NYCB or just the regional bank space itself?
I think this should be in the too hard camp. So number one, regional banks also are a really big part of small cap value. And so I think small caps, in particular small cap value, because of the regional banks, are in the too hard camp. And so what we do know is that there's $1 trillion of commercial real estate mortgages that will need to get refinance, extend and pretend, what have you, in 2024. And I think that commercial real estate is going to be slow to work out. And I think that these regional banks will be in the penalty box, not just for this year, but for the next few years until there's more clarity of who owns what. Also, if rates actually stay higher for longer, that adds another tension point on what's on these banks' balance sheets in terms of their long duration treasury exposure.
All right, they're going to have to leave it there. Again, New York Community Bank shares down more than 20% right now.